Good morning, good afternoon, and good evening, everyone. After a little summer break, we are back with BMCP.live and a great panel. Been very busy this summer onboarding great clients with very special token offerings, and three of them we are going to discuss today. And on top of this panel of three, we are welcoming two very special guests and friends. Most of you will know, but I hand over directly to Xenia and Masha to introduce themselves. Welcome, everyone.
Hi, everybody. It's a pleasure to welcome all the wonderful panelists and the audience as well, the listeners. We're really looking forward to today's discussion. So we're Masha and Xenia Vyazemskaya. We are co-founders of It Takes Two PR Studio and co-hosts of Value Tokenized podcast about digital assets, stores of value, and the future of finance, which some of you might know us from. And I think without further ado, I will ask our wonderful guests or panelists to introduce ourselves. So probably starting with Cantwell from Cosimo Ventures.
Thank you.
Would you mind telling?
Yeah, I'll give you a quick,
please say a couple of words.
Yeah, there's a little delay, I think. Yeah, I'll just give you a quick introduction and a little overview of what we do. So I'm with Cosimo Ventures, and we have set up our Cosimo X fund, which is a tokenized venture capital fund that's investing. It's investing in the next wave of tech disruption. It's a $40 trillion opportunity, and through the fund, investors can invest in and build exposure to the companies that are driving this tech disruption. So Cosimo Ventures, we're based in Boston in the US. My accent might tell you I'm not from the US. I'm based in Dublin in Ireland. We got together in 2014, formed the business. The team all have a strong track record as, I guess, serial entrepreneurs, investors. We've 40 issued patents across the team. We initially started out investing and operationally supporting early stage tech companies that were looking to expand and particularly looking to grow into the US. So we were operationally helping them do that. We then iterated in 2015, 2016 towards I suppose, a more traditional venture capital model, but always maintained that operational heritage and support approach. Around that time, we got involved in our first blockchain related projects and invested in some of those companies that were using blockchain capability. And that's really shaped our investment focus now, and indeed the formation of the Cosimo X fund. So, everybody on this call, we've all seen over the last 20 years the waves of disruption that the web has driven. The disruption and decentralization of media content, followed by the disruption and decentralization of commerce, the decentralization of communications, what mobile did. All of them eliminated incumbent centralized players. But one of the only things that, if we look at the status today, one of the only things that is left in the world today that is centralized is trust. So that goes from finance through to data, to commerce, and you basically have intermediaries who have built trillion-dollar industries, have positioned themselves in between markets or anywhere else that trust is required. So it touches pretty much every industry. And their whole reason for being is the lack of trust either between individuals or between institutions. But that's changing. Deep tech and blockchain-enabled businesses are disrupting this. The whole centralized trust economy, that's going to transform. It already is transforming. So we're not talking about the next wave. We are already in the next wave. So Cosimo X is focused on investing in these companies who are disrupting and driving this next wave. It's a massive value creation opportunity. So Cosimo X is looking to invest in deep tech and blockchain companies that have the underlying protocols that are driving this disruption, the capabilities like identity and authentication services, RegTech and custodial digital assets, brokerage services like Manta and exchanges, data protection and user privacy, and the platform and software applications that sit on top of all of these capabilities. And that's where our focus for investment is, into these companies. We are seed level and early Series A investors. We typically invest anywhere from $500,000 up to $2 million as an equity investment into these disruptive blockchain companies. We have extremely strong deal flow across the US, particularly strong in Europe, and growing in Asia. A lot of process, a lot of rigor around that. We look to do, on average, about 5 investments a year. We're usually the first institutional money into these companies, so we get, preferable terms. We've raised a little over 11 million to date into the fund over the last year, and we've made initial investments. But I guess the message from this is that investors can invest in the Cosmo X fund, get exposure to these disruptive deep tech and blockchain focused companies.
Thank you very much, Connor. We do have a lot of questions, but that I think we'll be able to address a bit further on the go. So thank you for the introduction. And now I'm handing the word over to Douglas Borthwick of INX Limited. Please say a couple of words of yourself and the company.
Thank you. I'm Douglas Borthwick. I'm the CMO and Head of Business Development for INX Limited. We are the first ever security token that's gone through the full SEC process, and as such is a fully registered SEC security token. And what that means is in the US, this can be bought by retail, by accredited investors and institutions. This is a whole new ball game. And when we talk about changing the world or getting security tokens out of that sort of quiet space where no one hardly ever knows what they are, the discussions we've had over the last 2.5 years prompted the chairman of the SEC last week to say that he can see all equities trading on the blockchain. We're obviously the very first IPO in the blockchain. We're raising right now $117 million to fuel our growth as a trading platform for both cryptocurrencies and for security tokens. Most platforms that exist right now allow you to trade crypto or trade security tokens. That's because you have to be an accredited investor, or at least you used to be in the United States. We've changed that game whereby the retail guy can now get involved. So we're raising a considerable amount of money. Obviously, Black Manta Partners is our partner in Europe to help us go out there and raise capital. We're very excited to be here and to discuss what we're doing. But we believe that for security tokens to be national and to change the world, every single person has to be able to invest in it. Because this is our IPO and because we're pre-revenue, we're letting everyone come in on the ground floor at the same cost, whether you're an institution or a retail investor, an accredited investor, everyone comes in at the same level. The money that we're raising, a good portion of that goes into a cash fund that the firm doesn't touch, and in fact goes back to the token holders if we don't deliver what we say we will. We expect to expand quickly in the cryptocurrency business throughout the United States, and then the security token business as well. We expect very quickly to come online. Thank you very much for having me here.
Thank you, Douglas.
Douglas, sorry, Masha, just one add-on from the broker-dealer side. As of today, we are not onboarding retail investors yet from Europe. So we at Black Manta Capital Partners, we are responsible for onboarding professional investors in the European Union. But as Douglas stated correctly, you're able to do that in the United States.
Yeah, thank you for that comment, Christian. And last but not the least, Mark, Stacey of OneCycle, please tell us about what you're working on and about the company.
Okay, hi everyone, first of all, and thanks to Black Manta for setting this up. OneCycle has come together, brought together a number of people from fintech, from business, from science to exploit an IP protected technology. And that technology is to extract a valuable commodity product. Well, I can't call it a commodity, but a valuable product from seawater. The IP protection is there so that we can basically do what we want to do. And within each cubic meter of seawater, we've identified there's up to 936 pounds worth of value that we can extract. We've built a team and we decided the route we wanted to go is to get investment via the digital route. And on that basis, we recruited and started work with and are working with some key partners like DLA Piper, our colleagues at Black Manta, Coiny, and we're working with Naris as well for cybersecurity. So we're embedded into the digital space, but the offer is around a physical product. So we intend to use the investment to build a production facility. We know where we want to build it. We know the permissions that we need. We have a plan in place to deliver that. And the key thing for us is that we use that 100 years worth of experience that our team have got, and we use the digital platform to create something that is secure, compliant, and in a regulated space. The offer, Douglas mentioned the offer to investors, effectively, we've done a price analysis with the market. We've looked at the market itself, why magnesium nanoparticles? I'm sure someone will ask that question. It's a high value, globally demanded, with a diverse portfolio of uses, with a price that can be segmented on both purity and particle size. There's a quality element, and we know we can deliver into the high end of the market. But we've deliberately chosen, after analysis, to price in on an issue face price, which is at the low end of the market, and then to further discount that further. So again, our offer is open to everyone who is meets the criteria of being able to invest in us. And what more can I say, apart from the fact that the technology we're going to be deploying will be environmentally friendly and also sustainable. So one of the outputs will be seawater, which we then intend to further process and offer. If we can offer it for free, fantastic. If we can't offer it for free, then we'll offer it at little more than cost to existing local industry and local agriculture. We'll also be using the benefit of solar and wind power to power the factory. So we're trying to combine all those key elements we see in the new industry going forward. Something novel, unique for extraction, which is environmentally friendly and sustainable, and using the power of the new digital platform to generate the funding we require to create our production facility.
Thank you so much, Mark. Wow, it's so interesting, the diversity of projects that we have here today, because I definitely can see like there are some similarities, but there are also like very different focuses that each one of you have chosen. And I think that our next question like that we would like to dive in would be the token offering design. And how exactly your offering is designed. What did you have in mind? How did you choose the audience to target? And what other considerations did you include? Maybe also starting with Connor this time. How was this structured for Cosimo Ventures?
So
if I can step in for a second. I think an important question here, sorry to interrupt you, Connor, what rights are exactly granted by the token and by the offering, because I see someone in the audience commented that might sound like ICO. So I think it's important to state what is the difference in the offering and what are the securities granting to use.
Okay, so Cosimo X tokens, if somebody buys a Cosimo X token, they are investing into the fund. The money that we take into the fund is invested into disruptive blockchain companies. Each token essentially represents an economic interest in all of those investments that we do with the money that comes into the fund. So it's an indirect fractional economic interest in all of those investments that we do through the fund. So that is I suppose the basic explanation of what it is. So in the same way that somebody might invest in a property fund, they get a fractional ownership of a property. In this case, it's fractional interest in a portfolio of blockchain, disruptive blockchain companies who are growing.
And how would you respond? Like, what is the core difference between an ICO? This is the concept that has not been around for a while, but how would you explain from someone who's mostly knows this model and is not aware of STO?
Yeah, so Cosimo X is a security token, which means it's governed by security regulations. So we you know, we have a strong US element to our business, so we are closely tied with SEC regulations. We follow all the SEC guidelines. There are a bunch of formal regulations that we have signed up to. So it is an entirely regulated and audited fund that we have.
Thank you. So like the regulatory aspect, I think it's something we will be focusing on in this panel quite a lot. But to cover and to compare other models, Douglas, can you please tell us how was your token offering designed?
Sure. Well, our token offering was designed in a number of ways. First of all, we wanted to do a regulated ICO. And we did it in a way such that we wanted to show a very bright light on the industry and show what could happen and what could be done. Our whole prospectus is on the SEC database, and that's because we're not a Reg A offering or Reg D, we're actually an F1 offering. That means there's around 300 pages that tell you exactly everything you want to know about our company, whether it's salaries, whether who owns what, advisors, board members, early investors. On top of that, our business plan. If we don't follow the rules, then obviously there's consequences for us. With an ICO, there are no consequences if they walked away, if the owners walked away. On top of that, we can't do marketing the way that others would market. With an ICO, you hire a couple of celebrities, you start jumping up and down in Times Square and you get people excited about it and you hype it. Obviously, you can't here because when you submit a paper to the SEC, you then are under what's called a quiet period. So we haven't been able to talk to the press for over 950 days. On top of that, we did it the way that we've done because every time someone buys a token from us, they also become a user of our platform. Most security token trading platforms in the US maybe have 1,000 or 2,000 accredited investors, folks that have gone through KYC AML. In the first 3 days of our offering, we signed up 3,000 people. On top of that, in the first 3 days of our offering, we raised over $7.5 million towards a goal of $117 million. So there are certain things we can discuss and others we can't. With an ICO, you can always discuss, hey, we've raised this much money. The SEC does not allow you to talk about your raise as it pertains to, as long as the raise is ongoing. So if someone says to me something like, well, how's it going? How much have you raised? I can't tell them that other than when we hit benchmark rates. The reason $7.5 million was important for us, it meant that for the first time ever, we were an SEC registered security under the 30 and 40 Act that could accept Bitcoin, Ethereum, and USDC as payment. And there's no registered security of our nature that's ever been allowed to receive that as well. So folks have always talked about how crypto, when it pays for taxes, that means that crypto is important. Well, now you can buy US regulated and registered securities with crypto. That's a huge step forward. Now, in terms of what does the token holder get? The token holder of an INX token gets a number of things. On the security side, they get 40% of our profits, or what we call the net operating cash flow. On top of that, they also get discounts when they trade on our platform. If you trade on our platform, let's say $1,000 of fees, you get a 10-20% discount with the tokens, and you pay with the tokens. That then retires the tokens from the public purse, puts them into the company's purse. It means there's less tokens outstanding. And at the same time, you're getting a discount whenever you trade. So over a couple of years, we expect there to be fewer tokens in the marketplace. And at the same time, we'd expect that profits would be considerably higher. So there's a tokenomics here where you have that movement as there are fewer and fewer tokens in the market as time goes on and as you expect profits would rise. On the same time, you can also use the tokens for staking. So on the cryptocurrency side, if you were to buy Bitcoin and then you have a fee, but that fee will be discounted based on how many tens of thousands of INX tokens you hold in your balance in your Ethereum wallet. One of the exciting things we did add to security tokens in the US in order to be able to sell it in the US to retail was we added a smart contract, the ERC 1404, that enables it's called a whitelisting or KYC AML. You can only hold an INX token, and we stand behind this and the immutability of the blockchain if you've gone through KYC AML. That means that for the first time, we've got a security where you can prove to any institution around the world that you have gone through a KYC AML by showing them your Ethereum wallet with an INX token in it. There is no other security token in the world that exists in that space right now. And if you have an INX security token and you want to sell it to one of your, or just give it to one of your friends and transfer it to their Ethereum wallets, you can't do that. It won't allow it. The smart contract in an autonomous nature checks the whitelist, sees if that wallet is on the whitelist. If it's not, the transfer doesn't happen. So there's a lot of things that we've had to add, and that's based upon the discussions we had with the SEC over the last 2.5 years. But it means we've now made this something that's much more readily available with much more liquidity than has ever existed in the security token market.
Thank you, Douglas. Now back to Mark. How was your token offering designed?
Okay, I'll keep this very, very simple. So effectively, our token, the Magno token, is a variable rate secured debt instrument. So effectively, we're raising debt. That's a digital asset. The Magno token will be equivalent to 10 grams value worth of magnesium oxide nanoparticles. We're actually going to be producing magnesium oxide nanoparticles. Therefore, physical production is tied to value of the Magno token itself. We've used a fixed price in the market of £165 per kilogram. That's the low. That's discounted below the analyzed price that we could find for a lower purity product, so a lower quality product. So we're already offering something below potential upside, and the potential upside could be as much as 3 times based on the market analysis we've done. So each token is going to be £1.65 face value for 10 grams. We're going to offer that out at 82.5p, and we're going to offer just under 8.5 million tokens. That'll give us the £7 million we need to build a 120 metric ton facility, which is all we're after at this moment in time. That gives us a platform to generate around £20 million worth of revenue at the £1.65 with around about 65% EBITDA, so it's significantly cash generative. That's important because it means that de-risks the investment because the amount of cash we're generating, we'll be able to use that to pay back the investor. The Magno token is redeemable after 5 years, but we have a call that we put in at years 3, 4, and that is because we believe that if the price goes above 300%, that's 3 times the offer price of 82.5p, we need to be getting those tokens back in as quickly as possible. And therefore, again, upside as far as the investor is concerned. The value of the token is linked to the future value of 10 grams of magnesium oxide nanoparticles. And one of the things that we are looking at is how to create additional transparency within magnesium oxide nanoparticle marketplace. So we're talking to people about that. It'll be blockchain based on the Ethereum platform, and we'll include a smart contract. So the Magno token itself is a smart contract, and that'll link through via blockchain through the entire production cycle, so we can provenance what we're producing, which is backing up the security token. So investors will be able to look in on a real-time basis and see what we're doing, where, if you like, their 10 grams of magnesium oxide nanoparticle actually is, or a ton of it, or however much they want to buy into us for. Realization at the end, well, as you said, we intend to, and we're actually going onto the Archax trading platform. So the security token will be tradable from the beginning of next year. The tokens will be redeemable at their normal maturity date. We'll put a OneCycle agency agreement in place, which means that at the end of the maturity date, people will come to us and say, look, we want to buy, we want to use the commodity. So therefore, we effectively will give them the commodity for them to use in their own manufacturing plant, if that's what they want to do. Yeah, that's what we're doing. It's quite an interesting wrap round of something that's a physical asset with a digital asset.
Thank you, Mark. And here I would like to step in and ask Christian to give us a bird view of different STO frameworks, because everything we just discussed, you work with different projects, and this, like, obviously STOs come in many different forms. So how can we take a look at this, like, step back, and what is your opinion on these different frameworks?
Well, thanks, Xenia. Indeed, I think it is very important to understand that every STO is not the same. So as we just heard from 3 very different examples, and as we see beyond that on the market, you can do very, very different things with an STO. You can grant equity, you can grant participation rights. You can have a construction of debt. You can go into all kinds of different assets. You can go directly into the entity, the corporation, the startup, or you can only basically, or you get shares of a fund, a trust, or a commodity somewhere. So we have a lot of different underlying assets, and we have a lot of different constructions in terms of what grants, what rights we grant, sorry about that. So, and the comparison you hear when you go to the conference, you hear IP on the one side, STO on the other side. Now be hearing there's something like a tokenized IPO. We'd like to see in one way of a security token offering like a packaging. It's a packaging of the security that entails then an actual digital entity, which can be the security or is the security in most cases. And that concept is important to understand, because the packaging itself allows us to do lots of beautiful things in terms of later trading on secondary market, transferring it to other owners, and so forth. I think that's one takeaway we should have from today.
Thank you, Christian. We have several questions from the audience that are not asked but in Q&A, but please ask your questions in Q&A section. But I think we will address everything already after we go through our main rounds of questions. Masha, would you like to ask the next one?
The video seemed to froze for a second, but now I'm back. For that, yeah, I think the next question is probably the one that interests our audience most in a way. Yeah, and I wanted also to note that we see all the questions coming in from the listeners, and we'll ask them in our Q&A round afterwards. But now my question to all the participants is, why exactly did you decide to go for an STO as the offering? Because it's a pretty innovative way of fundraising, and it certainly requires backing from the team, from the early investors. So also here would be very interesting to listen about the reasoning and how you made this decision. Connor, would you like to go first on this?
Yeah, I must say the going down the tokenization route has been revolutionary, I think, from our perspective. We're coming from a place where venture capital is very illiquid. Investors into venture capital funds are locking their money up for nearly 10 years with very limited visibility. But by going down the tokenization route, we were able to bring liquidity for those investors. So anybody who invests in the Cosimo X fund has liquidity, and that comes in a number of different ways and with a high level of flexibility. So like Mark, we're listing on exchanges, and that these secondary markets drive liquidity automatically. In addition, as we're investing in a portfolio of high growth companies, as these companies grow, we will exit our position in some of them. The proceeds from any exit, 50% of them are automatically pushed back to investors. 50% is reinvested into the fund. But again, through the tokenization route, we have that ability to give our investors liquidity from the proceeds when we exit on a deal by deal basis. It's also very transparent. We do quarterly valuations on each company. At a minimum, there are external valuations and market validation as the process goes on. As other investors come in, that would trigger a valuation automatically in a business. So we update it quarterly, so that in turn impacts the value of the fund, which we expect to increase, obviously, and that is fully transparent to the investors. It also broadens our investor base. So if I look back to when we operated as a traditional VC, we had 19 high net worths and family offices who invested. We spent 3 months with lawyers on both sides figuring out the terms, whereas with the tokenized offering, it's largely automated. The terms are straightforward, they're very transparent. There's a minimum investment of $10,000 outside the US. So it broadens our investor base dramatically. So we have had everything from $10,000 investments right through to multi-million-dollar investments into the fund to date. It's also an evergreen fund. So we can, I suppose, attract funding into the fund on an ongoing basis. Again, a big difference to a traditional fund where you raise a huge amount of money up front and then deploy it over a number of years with all the challenges that brings. But with an evergreen setup, it's more of a straight line process as opposed to a hockey stick. So they're really the main benefits of the fund. It opens it up to a broader range of investors, very transparent, lots of flexibility in terms of providing liquidity back to investors. Can't figure out why not everybody else.
Thank you, Connor. I think it's a very interesting thesis that STO as a fundraising method already allows to broaden investor base, because I think that is something that many companies who are looking into this way of raising capital are still pretty afraid of. But it's amazing that you're already seeing this. Douglas, it certainly takes a lot of courage to become one of the first to do something, especially like in the United States, and the offering that you're doing. So how did you decide to go for that, and how was initially this process kicked off?
Well, I think our board is made up of 3 guys that maybe your audience are familiar with. There's David Whelan that came up with the Jobs Act, which essentially is behind crowdfunding and security tokens in general. Tom Lewis that ran Ameritrade, and Nick Thedany that ran the Toronto Stock Exchange. And the view that we had as a firm management and board was that eventually all securities are going to move onto the blockchain for KYC, AML reasons. Now, we knew security tokens were going to be big because of this thought and this vision, but we knew they wouldn't be big for as long as it was just an accredited investor type product in the United States. And so the actual product available for retail had to be created. And that was 2.5 years of hard slog, over 950 days, working with the SEC with the wording of what a security token is, but also working with Ernst & Young, our auditors. And even when we started this process, which was the end of 2017, someone's asked, why Gibraltar? But the reality is, Gibraltar was the only place at the end of 2017 that Ernst & Young, our auditors, said was a non-dodgy country where you can do registrations. And so there were no other outlets. So we registered and domiciled in Gibraltar, and at the same time going forward, the rest of our operations are in the United States and registered in the US. But our feeling was, look, we'd like to raise money from the general public, from institutions, and from accredited investors around the world. And that grows our community, because you need a community if you have an exchange of the nature that we're building. Everyone understands that. When you start up with 25,000 folks that are already owners of your exchange, they're going to trade on your exchange every day. This is important to us. At the same time, with our token, we wanted to have international, cross-border listings. And I think Mark and Connor have both talked about listings. Obviously, there's 3 or 4 digital exchanges that we expect to list on shortly and make an announcement. And there's also legacy exchanges that we've talked to about listing there as well. We want to list on as many exchanges as possible. That's the beauty of the security token, is it doesn't cost millions of dollars to list on another exchange. It's a couple of lines of code. On top of that, we wanted to have a direct relationship with our token holders. When the token holder buys a token and it goes in their Ethereum wallet, we pay our distributions into that Ethereum wallet as well. So we get rid of a lot of these things like the transfer agent or banks that normally have to get involved, maybe take 10 to 15% of your distributions as a third-party cost. Getting rid of all those third-party costs and having the ability to give people money directly was something that we thought was important, and obviously is a huge selling point to the NASDAQ stocks that are looking to digitize and come onto the blockchain. We also believe strongly that the US government is going to force stocks because Nike you can give to your grandmother right now and nobody would know that. But with a security token, you can't do that. So you cut down on AML issues, you cut down money laundering, KYC issues. So we see a tremendous move. And it's sort of like people said, music's never going to go digital, mail's going to never go digital. And then overnight, you find out that everyone's gone digital. We wanted to be there, but we had to create the product first in order for it to be what we believe to be a sustainable business for an exchange.
Thank you, Douglas, for this comprehensive explanation. Mark, and talking about OneCycle, what fueled your decision to go for security token offering as a fundraising mechanism?
Okay, well, first off, it'll probably cover some of the same ground as Connor and Douglas, because there's some key fundamentals within this type of space, which is to do with transparency, to do with liquidity. We thought that was important, but mainly and pragmatically, we're coming to get debt funding to build a facility. Now, the options to do that are somewhat limited in normal space. First off, we didn't want to give everything away to venture capitalists, even though we have interest in venture capitalists, and we didn't want to go to standard institutions. We also had conversation with people in fintech world, and they were saying, look, this is the route you guys have got to go, because as Connor and Douglas have both eloquently said, this is the route that the world is going. You need to look at this, you need to consider this as a way of raising funding. And we looked at it and said, okay, what benefits does it bring to us? Well, if we're physically making something, how can we make something and then say your security token is going to be linked to this product without having armies of people shoveling into small plastic containers or large plastic containers and putting barcodes and everything, or actually using the power of blockchain and using blockchain to actually provide provenance through that production cycle. So the end result is you as an investor can see where my product is, i.e. that the item that is backing up the value of my security token has physically been produced, is in a secure facility, and therefore I know where it is at any one time. We couldn't have done that any other way. And a series of pragmatic reasons for trying to get the right type of investment. So again, like Connor, like Douglas, we're broadening out the approach to get as many people on board as want to come on board who can qualify. Our entry point is £25,000. So it's not significant, but it's significant enough. But we're taking, again, large sums of money. So it's that combination of factors that the others have mentioned, plus some very, very simple practical things that we need to do to deliver transparency back to customer. And again, mentioned liquidity, the reason why we want to get the token onto an exchange. We believe there's the opportunity to provide that liquidity for our investors. And one of the investment redemption routes, of course, is to be able to come in and sell your position out. Now, if we don't provide that, and the only way we can provide that is through that platform, then we lock people in, and that's not right. Not in the world that is constantly moving, where we can all change our phone contracts almost like clicking our fingers. Why would you want to be locked in for a period of time when you feel that you actually want to extract your position at any one point in time?
Maybe if
Thank you, Mark.
may, Masha, just adding one thought to Mark's statement, because we get a couple of questions, some questions, couple of them touch on the topic of secondary market. And together with both our customers, OneCycle and Cosimo X, we also talking to Artex Exchange in London, one of the first licensed security token exchanges in Europe. I think what is important to understand is, and it's in conjunction with what I said before about the different types of security tokens, we will see lots of different secondary markets for different kinds of offerings. So basically the end stage of a security token exchange that is almost functioning like a normal exchange, and the road basically where INX is going is one end for different types. We will see peer-to-peer trading for certain offerings, a functionality that will be realizing already on our own platform, either by the end of Q4 or early next year for the primary market offerings we've been running. And then there will be other secondary market trading facilities that focus either on security tokens or on startups or on funds, commodities, whatever. There might be exchanges that basically cover all of that, but we believe prospectively liquidity will be provided in many, many ways. And we are just at the very beginning of building the foundations of the whole ecosystem. And INX will be one great part of that, and other exchange projects around the world will basically cater to the same purpose.
Thank you, Christian.
I think it is now time for the questions from the audience.
Yeah, I think we're ready for the questions.
So, do you want me to moderate, or do you want to take some? Let's start.
We can start with the Q&A and then go to the chat. I think we also had some questions in there.
Well, one very short and simple one to Douglas. Will INX also do an IEO?
There is no plan for any IEO right now. We believe that we're going to raise the right amount of capital. Indeed, may have already. We're raising money in 3 ways. Obviously, we're raising money online. We're also raising money on an institutional basis. The largest ticket actually that came in online was for $450,000, and we've had tickets coming in of around $5 million on the institutional side as well. So we've got lots of capital coming in through this process. That's what we're excited about right now. In the future, if we were to do anything with an IEO, that wouldn't affect this token in any way. That's a contract between the firm and the token holders that we would pay out 40% of our profits to the tokens that are existing to the outside world. So that would never change however we treat equity in our company.
Thank you. Actually,
I think
please.
Yeah, there's a couple of questions also related to INX. The next one, probably from the same attendee, is when INX exchange is expected to go live.
And in the F1, it says that the INX exchange will go live within 6 months after the close of the IPO. I know that sounds extremely wishy-washy. I would expect that it would be in the first quarter or possibly the second quarter, but primarily I'd go with the first quarter of next year, 2021.
Mm-hmm. I think we already covered the question about the reasons behind INX registering in Gibraltar versus other jurisdictions. I think he also touched upon, does INX token represent a share or a revenue participation note? So in an exit event.
Yeah, it's a revenue participation note that also gives you the utility side where you get discounts on the trading of security tokens and staking on the trading of cryptocurrencies. In terms of an exit event, let's say INX was to be purchased. What does that mean for the token holders? Well, it means that they would continue to get 40% of the revenues generated from the INX product, but they would also get returned to them the cash fund part of the token purchase. So as I said, we're raising 117 million, $70 million, 70 of that is actually going to be kept in a cash fund sitting in a bank. So $47 million is the working capital that we would have to do our expansion. Let's say we were to get bought over, that 70 million would then go back to the token holders, and then they'd continue to get the 40% payout. The reason we want to have this large cash fund is because Morgan Stanley, Goldman Sachs won't trade with us if we don't have a large amount of cash sitting in a bank account somewhere.
I think there's one more question that's probably best for Christian to answer. Is how much does a tokenization process cost from the scratch? Legal, design, compliance, etc. Like it's related to what Douglas just said. So Christian, would you like to take this one?
It's a very short answer. It depends. No, we've seen today, and you will understand, we have lots of different offerings and we have different complexities. It really depends, firstly, on the underlying asset, how it is structured, in which jurisdiction we are operating. So as Black Manta Capital partners. We have our license with the German regulator BaFin, but we've passported that basically to all European Union member states, so we can operate anywhere in the EU. We operate also a couple of offerings in the UK, and we basically, as a broker dealer in distributing these tokens, we can onboard anyone from across the globe. So you have another important question on the cost side is basically if you're approaching professional investors only, or if you're targeting also retail, then again, depending on the jurisdiction, you will have a series of obligations in how you publish information. You run a prospectus by the financial regulator, and also you have to bear in mind that when you go retail with offering, you probably have quite different sales and distribution costs. So you'll be addressing your audience differently. You'll be running online marketing and other approaches, probably with a different budget than if your project is professional investors only. So that's what I take to end. Anyone can contact us on contact@manta.capital if she has more specific questions or wants to run a project proposal by us.
Thank you.
I think there is a couple of questions related directly to the projects. And Connor, I will address one to you. How do you source projects that Cosimo invests in?
Okay, so so we target projects across US, Europe in particular, and increasingly in Asia. We have what we call deal flow partners. So this is where we source projects, broad cross-section of deal flow partners, everything from accelerators, universities, state agencies, right through to the whole blockchain community events. So it's quite broad in that sense. We have about 170 deal flow partners. We rank them in terms of the quality and the relevance of the projects that we get from them. We actively engage with them. They typically know what we're interested in, but we would have very, very strong deal flow. And then we have a very strong process underlying that, a 6-stage process to evaluate projects and take them through essentially a sales funnel lookalike. So we would, at the bottom of the sales funnel, you probably have 1%, maybe less, of the companies going in at the top of the funnel.
Mm-hmm. Thank you, Connor. Mark, another question regarding OneCycle is what magnesium is used for. So what is the purpose of that?
Okay, the magnesium oxide nanoparticles probably wasn't clear as I was going through the initial part about OneCycle. It's a $2.7 billion worldwide market with global spread. So there's across the regions of the world, there are a number of different end users that are using it. There's some 6,000 in Europe. There's 1,000 in UK, which we have identified. The use spans a variety of different industries, from furnace linings because of the temperature nature of magnesium oxide nanoparticles, textiles, electrical conductivity materials, aerospace, electric cables different to the conductivity materials. So it's quite a broad spread in different uses. It's one of those sort of unsung heroes which, partly because of price and partly because of availability, isn't being used as much as it could be. So yeah, it's got a very broad portfolio of uses, which one of the reasons that it attracted us to it was because we weren't tying ourselves into one geographic space with one sector use. It meant that there was a de-risk across who we were trying to supply to, and the sheer number of end users meant it was a great opportunity for us. Does that answer the question? I mean, it's multiple
Thank
uses.
you, Mark.
Yeah, I believe it does answer the question in detail. Maybe James, who asks it, can comment further if this answer was enough. And then we have one more question for about INX. Does INX token represent a share or revenue participation node? So in exit event,
I think we just answered that. We just
already
answered that one. I think probably it's a duplicate. Yeah.
Mm-hmm.
So I think in case somebody has a question, that's probably the last chance to ask those. Probably we have time for maybe one more question because we're getting close to 1 hour and finishing our talk. And if not, I guess there is time for some final words and comments from the panelists in case there's something you want to share.
Just picking up on something I noticed in the chat room earlier, be very, very clear. It is not an ICO that we're offering. This is an STO. It's a variable rate secured debt instrument. So the debt, the money that we raise is going to be secured against the earnings that we are delivering from magnesium oxide nanoparticles and also against magnesium oxide nanoparticles themselves. So I just saw that comment in the chat and I thought, no, I better get in there and make that statement.
Yeah, and I think Connor also commented in the beginning a little bit like on this difference. So I think this is one of the questions we were able to comprehensively answer on this panel, like what is actually the difference and why it is completely not the same. So thank you for this, Mark. It will also be interesting if Christian, can you say a couple of words wrapping up our panel from today? What would you like our audience to take away from this? So, okay, we did some very interesting comparison, went through regulations, token design. Is there anything else that anyone who considers an STO, considers investing in a token offering should know?
Well, first of all, Xenia and Masha, thank you very much for moderating from Moscow and Vancouver. I think it was a very interesting panel, and thank you very much to Douglas, Mark, and Connor. I think we've seen three very different, very interesting offerings on the market, and we are very pleased as partners to be the broker-dealer to offer these offerings in the European Union. So I think what remains to say is reach out to us. You can always contact us directly via email, contact at like manta.capital or through the website. You will find further information on all three offerings. And we are happy to have a chat and provide you with further insight, additional information if needed. And yeah, we look forward to continue to working with the three partners, and we look forward to see and hear the audience again in one of our next BMCP lives.
Yeah, thank you, everybody. This was a pleasure to host and a very engaging and interesting discussion for us as well. So thank you for the opportunity. We're always open, so please please reach out, and yeah, happy to repeat this.
Great. Thanks again. You can rewatch this.
Thank you, everyone.
YouTube soon. Follow us on Twitter and LinkedIn. Have a nice time.
Thank you.
Thank you, everybody.
Thank you.
Bye-bye. Bye-bye.
Thank you.